Paul here with GammaEdge. Today is Thursday, the 7th of July. Let's get started. Pause your players, please. Read this. It's important to you. It's important to us. If you agree, hit play. The market model continues on its slightly weak bullish tint. I will note at the top the breadth is still very poor. You can see that with the 52-week new lows still dominating the conversation. We're not seeing a lot in the way of broad market participation for this latest signal, so just be aware, prone to failure. This is the filtered cumulative tick. This basically is showing whether the large players are playing or if they're not. Right now they're not in terms of they're flat, so we're not seeing a lot of demand from yesterday. I know the FOMC minutes came out, but even with that, not a lot of aggressive move one way or the other. Excuse me. The cumulative tick, which is not filtered, this gives us a view of daily sentiment, flat on the day. When we take a look down here at the bottom, this is the cumulative tick. This gives us a fairly good indication of what's happening in terms of market sentiment, much like this, except it doesn't reset day over day. This is the ribbon. The ribbon shows us historically, have we been above or below, what's the net, when we look back in time, view of the market, and we've been selling. We've been selling for a long time, literally since April. So with that thought in mind, we are still in a continuation of the long-term downtrend. We did get a signal on Friday in the ARCX, and then it was confirmed on Tuesday across the board in the other CT cumulative tick charts. Just be aware, we almost failed yesterday. We did return positive, but it's extremely weak. We're not thinking that this is a very strong signal as of yet, and it is prone to failure. Don't get out over your skis. Go ahead, pause your player, read this. I covered this yesterday. Basically, this signal that we're on does have a very good expectancy, a very good profit factor when you take a look at the longer term trend, and you can see that the maximum drawdown here in orange compared to the final gain of your portfolio as a function of the days held if the signal materializes, and that's a big thing. This is not predictive. Don't think of it as a predictive signal, but if the trend continues to develop, this will have gotten you in at a very good spot, and you can see that the overall gains are good. So read this, it's important. Ask questions in the Discord if you don't understand what this is. The index conditions, we are seeing net negative gamma drop and net positive gamma increase for the SPX, the SPY, only on the call side for the Qs and only on the put side for IWM. In general, when we see this is constructive to the bulls. Take it for what it is. We are seeing calls go in on some of the biggest complexes, the SPX and the SPY, and that's material. We definitely want to pay attention to that. When we take a look at volatility, very interesting set of developments here. Not really seeing much of a change in the overall gamma structure. Again, we don't believe that the VIX behaves in a gamma environment like the others, but we like to use the same tools just to get a visual of what's happening, and that's what you see over here on the left. Over here on the right, when we take a look at the OI change, so I want to make sure you understand what you're seeing here. We are seeing a significant number of calls being added out into the August, September, and October timeframe. This is consistent with what we've been seeing, and you can see in terms of magnitudes, fairly significant magnitudes targeting that 40 strike in the areas up here. So keep watch on that. We definitely want to be able to see if those are going to come out or if we're going to continue to see additions there. You can get this and look back in time in the Discord using the $ OI VIX, and that'll give you this chart. That's a one-day look back. And then if you want to look 2 days back, 3 days back, 4 days back, just $ OI VIX 2 or a 3 or a 4 as applicable. And what you will see is this is not the first time this has been happening. We've actually been watching this go in for several days. Excuse me. When we take a look at the overall SPX, SPY, Qs, and IWM, we are seeing puts being added in the short term. Look at the magnitudes again. That's pretty important here. And you can see the magnitudes are much larger and more short term here for the put side of the equation compared to the call side of the equation. Also see some dominant levels going in, so just be aware of that. Same thing here on the Qs and on IWM, so want to pay attention to that. We do think that there is some positioning for downside movement here within the Qs and within IWM, as well as you can see here with the SPX and the SPY, at least in the short term. This is a big change from yesterday. We had a significant drop in the true delta zero and the true gamma zero. When we have that, I've written about it here. I want everyone to pause their player and read it. Why this is important is that it shows in a counter trend that puts are being added and calls are being closed, and I want everyone to pay attention to that. Fairly significant change in behaviors here, so we think this is a counter trend indicator, and we think that downside positioning is occurring in front of us. Also note, now we've got this, what we call a forfer or a quad level up here. It's going to be very hard to get through this 3,900 to 3,910. If we do, the 4,000 level is going to be extremely difficult to penetrate. Taking a look at the 0 DTE, not a lot of comments to say here. It's a weak expiry. You can see where the key levels are here. You can see that we've got a little transition zone here. Range is between the two blue bars. Just note, if we move above 3,900, the moneyness of this changes pretty dramatically. Under 3,800, not a lot here. In terms of magnitude, fairly small actually, so just be aware of that. When we take a look at the SPX in general, this is called the combo complex. This is the AM plus PM settled, so this is the mothership of 4.5 trillion notional, and then the PMs, which is another 1.5 trillion or so. We're getting more positive, but still very negative. Just be aware of that. We're still on the low side here of the overall gamma. The net balance is to the negative side. COI, POI up here at 4,000, extremely difficult to overcome. You can see that the JPM hedge up here at 4,005 is already starting to rear its ugly head. The range is between the two blue bars. We're at the top of the gamma, negative gamma range. Very ugly structure going up, very big magnitude. It's going to be very difficult to get over that 3,900 like I just said. To the downside though, you can see that the notional deltas are getting very small. A lot of weakness here. The gammas are not necessarily going to support us, although we do have a very large level as we move through 3,800. We're worried about a drop to the downside. There is not a lot of support here, and there is a lot of imbalance to the upside, so just be aware of that. Taking a look at the SPX structure, we're way down here. We did see yesterday a significant growth of the 4,100 strike. We've got a lot to get through, and of course this 4,005 strike, which is the JPM hedge, is coupled with that Livermore number at 4,000, which is also COI and POI. So a lot going on there, be aware of that. 3,800 is growing, sorry for the typo there. 37 and 36 are getting smaller. We're actually seeing hedges being removed, puts being removed, and we think that's a little problematic here for the markets. We're starting to fill in nicely in the call structure here. Just be aware of that. So there is a potential to move up. We are seeing it happen before our eyes. This is getting smaller, this is getting larger. That's bullish, but it's very, very weak to the downside. To support us, there's a lot of resistance to get through this transition to the upside. We'll just have to pay attention and watch it. So what is the summary for today? The market model continues on that weak bullish entry from 7-1, which is Friday. We think it's prone to failure at this point. We have a lot of weakness there. Everything is mildly bullish, but the overhead structure is not supportive of that rapid move upwards, certainly not through 4,000. The zeros fell in a counter trend, which we think is a big deal. The market model long term, we're still inverted, which is bearish. We have that long signal with the shortest MA triggering slopes, so we're in this transition phase of the market model. Be aware of that. Shorter term, the bounce is continuing, like I said. It did continue to advance on Tuesday and yesterday, so be aware of that too. The wing charts are improving. The zeros fell, which is counter trend, so that kind of offsets a lot of the bullishness that we see here. The VIX is also indicating out in August, September, October calls. We also show that the overhead structure at 4,000 is going to be difficult to plow through. Though again, I showed in the zero charts, the 39.10 area is very, very difficult to get through. And then the downside, 37.50, didn't talk a lot about this, but some other analysis that I posted in the Discord shows that this 37.50 is probably the lower bound of where we're going to go in the short term. Here's some if-thens for the 0 DTE. The bottom line here is that we're not seeing a rapid advance up, so be aware of that. So with that, I bid you farewell. If you like today's content, come join us over at GammaEdge.us. That'll take you to a sign-up page. It'll get you into the Discord, 14-day free trial, all the tools turned on, lots of good stuff going on there. Follow us on Twitter at GammaEdges with an S, and then here on YouTube, if you like today's content, please smash that like button, and then follow us, of course, so that you can get notified the next time we post something. With that, I will say goodbye and hope to see you in the Discord. Take care.